Check
Okay.
this. Check it out.
Good morning, traders and investors. Welcome to Tuesday's editions of Benzinga's pre-market prep, brought to you by OptionsHouse. Joe, how you doing this morning?
Joel, I had it all ready to go the first time, and now that we've sort of shot off and had to restart again, I'm just going to run through it really fast. I'm exceptionally thankful today.
Why?
Why? I'm thankful for the man to my right here, my right hand man, you might say, my associate editor, Jason Shubnell, who just so happens to be the luckiest man alive. Did you know that?
And why is that?
Because he shows up to work every day. He does a fantastic job overlooking the Ford thing, Shubs, but he managed to escape the dismembering grasp of Donna Shrivo, his childhood babysitter. Can you believe that? He must have
Yeah,
been a darn good kid to have not have gotten on her SHIT list.
yeah. I read that or I heard that on the radio riding in this morning that a Sinclair Shore woman dismembered her son, and I guess Chubbs was she still was recovering from when she babysat him.
Yeah, I guess so.
Okay, let's move on to the markets here, and we got the S&Ps after just a horrible day yesterday. Now we're over 110 points away from the all-time high, getting a little bit of a recovery here, Dennis.
We're bouncing back here a little bit. We're up 6.5 points right now. I think fair value isn't quite up as much, though. I'm just going to go check that right now. Yeah, it looks like we're probably only up about 4 relative to fair value here, so not up as much as we appear. That's always just the cash settlement price at 4 o'clock to where the actual index settles there at 4:15. So that's why you see that difference sometimes with the price with the S&P futures and S&P spot. But yeah, the market trading up here 1739.5. We've been as low as 1734. Kind of a tight overnight range for once. I'm used to coming in and seeing these 20-point overnight ranges. The high only 1743.75, so it's just a 975 overnight range.
I love this 15-minute chart here. I mean, you have the volatility from yesterday. You made the low, and you had pointed out to me that some people were just puking after 4 o'clock. They just kept on bashing the S&Ps there. Took it way under fair value, and then some people came in for a bargain for the overnight bargain, and we're getting a pop here. We got to pop up to 43.75, but look how long we've been hugging the 1740 area
All
forever.
that long.
Yeah, so this is my call here. We got to hold the 1740, blast through that overnight high 1743.75, and then who knows where we could go 1750. But if we don't get up and we don't take out that pre-market high 1743.75, Dennis, then I think your proposition that we're going to take out that 32 and a quarter low will stand. I don't think they're going to crush it much below that. Like you think it's going like to 1700, but I think they might. If they do take it out, they're going to take it out by a couple points and then sucker everybody in and then rally it back. But
That's what I said. You
no,
just
you
took
said
my whole
seventeen
thesis. I didn't.
fifteen.
I
You
said
said
they're going to
seven.
take it down maybe to 17, 15, 17,
That's
20,
not
which
going
would
to
knock it
happen.
down pretty good, and then close positive.
That's
So
not going to
I'm looking
happen.
for more volatility. I don't think it's going to stay as light as it is. If they take out the 1732, I think they take it out pretty solidly. I think we take it out by 5, 6, 7 points, but I still think we close positive today. So I think they're going to eventually come in with their buying shoes on here. I just don't feel like. I feel like it's just not going to bounce right back here this morning. I feel like there's going to be another shakeout because there always is another shakeout. Market likes to punish the maximum amount of participants. I would love to go down there, shake out everybody through yesterday's low. Maybe you're right. Maybe only by a few points, but then rally up and close positive. So still bullish overall, but I'm kind of bearish this open. I just don't like it when you're giving all of a sudden everybody 6, 7, 8 points S&P futures back. They come in, they're looking to sell, and I think they might look for it at the open. We'll have to see. We're still an hour and a half from the open, though, so a lot of things can happen here in the pre-market.
Buy the dip, Dennis. Buy the dip. This was a
Buy the dip.
this
That's
is a dip.
well, and it works in some stocks. Look at Michael Kors. You want to be talking about buying the dip. If you were buying the dip before that stock reported here today, it got rocked yesterday. Michael Kors was down $4 ahead of the earnings. They were leaning the wrong way on this one because it is up 15 points now here in the pre-market. Actually, I'm not even doing the math right. It's 16 points now here. $93 it just ticked to. Went out at 76.67. Michael Kors just blew the numbers away. 111 versus 86. 1.01 billion versus 859 million. So blew the top number away, blew the bottom number away. Raising guidance 307 to 309 seeing earnings. Estimates were down at 283. That's for the full year. So Michael Coors making new all-time highs.
Ridiculous. Oh,
Ridiculous. After all that, that's Jules. Look at the chart. Look
I'm
at the
not.
pre-market chart. It's just a big green bars just keep going up.
I
You want
know.
a short? Actually, it's coming back into where you want a short. Where are you saying? 92.70?
Just whenever I first looked at it, that's where I wanted to short it. Whatever price, if I would have gotten here earlier and it was at 90, I would have said shorted at 90. But let's just keep an eye. I know these kind of strategies are not what you should really do as a trading strategy. But we'll let this thing. We still got an hour and 20 minutes away from the open here, 93.68 high. I just hope it just keeps going into the close here. My prediction with this one is whatever high it makes in the pre-market, it will not see during the regular session. There's just
what is the pre-market high so far?
93.68.
All right, I'm writing it down. 93.68.
Yeah, the high very well could be in.
And the high might already be in. It's 92.34, so it's $1.30 away from there. Who knows? This is incredible, though. They did blow it away. It's huge volume too here, 860,000. So you knew they were going to pop it. I just didn't think they'd pop at $15. That's just an incredible move. So there's still people that like to come in here and get crazy, and they're getting down and dirty and Coors, and they're buying it up, and they're buying it up big time. Also, earnings here. Let's just bounce over to a couple other earnings plays.
Hey, Dennis, real quick.
What do you got for me?
I got some breaking news on JCP.
Uh-oh.
Yeah, okay, so they gave, I think they recently did this. They gave another financial update, said turnaround remains on track. They reported 9-week comps for November and December up 3.1%. The quarterly comps were up 2%. And heads up, that is the first positive quarterly comparable same-store sale figure since the second quarter of 2011.
Wow.
Popped up to 606. Now it's kind of coming back down. It's up about 3% pre-market. 589 last trade in JCP.
Nice.
Well, it was on the death march there yesterday. Made new lows again down at 561, but I guess it's going to give it a little bit of lift here. Joel, what do you think?
We just made a pop. Good call on that. 606 was the high. You go to the dailies, you take a look at the daily chart, you had a high at 601 and 613. Now, the last time they pulled this trick, okay, it got way overdone in the pre-market. Remember that? And then it got up, to 1080? And then they came in and then they just tattered it. Now it's half the price. I'd like to see follow through that pre-market high so far of 606 and through 613. I think if they get it through that level, things open up to the 650 level. But not going to get too excited here until we take out the 613.
Did anybody follow the J.C. Penney tweets during the Super Bowl? Did you guys see that with the whole, they were calling it the drunken tweets?
Jake was all over that. He was loving it, or he was loving to laugh at it, I guess.
Everybody was wondering what was going on there. I'm trying to go back just in the J.C. Penney feed there. I can't even see the tweets in there now. Did they delete them?
Are you serious?
I'm looking in the feed right now in the J.C. Penney
Dennis says they deleted the tweets.
I don't see them in there. I wonder if they did. I wonder if they actually did delete the tweet. So anyways, it was gibberish. It was just tweeting gibberish, and you couldn't make out what it was.
Jake doesn't
and then everybody
seem
was
surprised.
saying, J.C. Penney is the guy that's running the J.C. Penney feed drunk right now? And Coors even tweeted at them, and they said, enjoy our beer, but enjoy it responsibly. Tweet responsibly, J.C. Penney. That's what they were tweeting back at them. Anyways, it ended up, they said they were tweeting with mittens on, and they were trying to promote their new mittens, and this was their whole thing. Go USA, their new mittens, and you can't tweet very well with mittens. So I don't know. It was interesting anyways.
As my dad would say, I hope they didn't stay up all night thinking of that one.
Actually, it got people talking though, so maybe mission accomplished there. Because if you get people talking, what do they say? Any type of press coverage is good coverage. And
yeah.
Everybody was talking about those J.C. Penney tweets. So
Yeah.
And the stock's popping here today.
Yeah, a
I
day
think that's
later, I don't know. I mean, this thing also, longer term here. I know I talked about that the 613 level. The other, I mean, I really would be hands off on this thing until it had that double bottom back in October, right around the 6.25 area, and that was the impetus for the rally over $10. So until it gets back from those old, that old double bottom at 6.25 here, path of least resistance is down.
And it is still giving it back. We're now down at 580 here, so we're only up 11 cents here now. So good news, it appears, but they are giving it back. I wonder if this thing is even going to even close positive. If for whatever reason it does continue to go down, I can tell you there's a few 100,000 shares bidding down at 550. So maybe that gives you a little bit, but I mean, a few 100,000 is nothing for JC Penney to just chew its way through. So we'll have to see. We'll give you an update here as the show goes on, see if this thing actually is going to give back these gains or if it's going to try to mount a rally. International paper also reported here this morning. Not a lot of action on this one. Very light volume, only 1,300 shares. But what a crazy range for that stock yesterday. Actually was trading up there, 48. Resistance very well defined up in that whole $48 area. But they missed here today, so I don't think that area is going to come into play. 83 cents versus 87 cents. 7.25 billion versus 7. I can't read my own writing. I think it was 7.35 billion. So missing on the top, missing on the bottom. Stock is trading down slightly in the pre-market. We're only down 25 cents at 45.80 right now. Actually quite tight the range too. It's 45.81 bid to 45.95 offer. 45.50 looks like an area to me where this thing might find some initial support. What are your thoughts here, Joel?
Let me take a look at IP here. Paper stock, you're right, did have a big range in the pre-market. You did get some action. Let me trying to pull up the chart here. Having a few problems with it. No, Dennis, you have to take this one here. I'm having problems with my chart.
All right, so I'm looking here from 5 days ago. You had a low down at 45.32. You also had a low next day, 45.56 and 45.55. So that whole 45.50 area is the area I think this IP needs to hold. Below that, you got a lot of air below. I'm not saying it's going down all the way to 44, but nothing really jumps out until I see that 44 level. So be interesting to see here if IP can hold up. It's holding up well, considering that they missed as much as they did. It's holding up well so far in the pre-market, but when you only have 1,400 shares traded, really hard to say where the price is going.
You got any sympathy plays with that?
International paper. Brent, what do you got for international paper? Is there anything? I mean, all these paper companies are kind of going the way of the dinosaur. They not a lot of them.
Absolutely. Let's see. How about well, I might have to take you into more of like the packaging sector, I guess. Packaging Corp, PKG, there's Midwest Vaco, MWV, there's Rock10, RKT. You could even go with a little Clearwater paper. That one is CLW.
Okay, and they're not really responding as yet.
Nothing. Well, when you got the primary stock not really responding, it's going to be hard to even play sympathy plays. Wait till that thing moves. So, obviously, with the stock's only down 15 cents on 1,400 shares, if nobody's interested in the stock reporting, they're probably not interested in any peers. YUM also reported here last night, Yum Brands, and they blew it away. 86 cents versus 80 cents. Actually, revenue missed a bit, 4.18 billion versus 4.26 billion. This stock, after putting in the quadruple bottom down here in the whole 65.80 area, was off to the races last night. Actually got up over $70. It's pulling back here a bit this morning. It's trading at 69 even.
Doesn't it seem like we've seen this scenario so many times with the earnings here? A lot of these stocks, of course, it's been the result of a weak market, selling off, going into the number, getting a pop off the number, and just not holding here. I mean, you did get a pop up to 70.44. You're quickly back at the $69 level. Looking at the dailies here, you did have a high at 70.68. So I'd keep an eye on that level. Unless they could get back even over 70 here, it just might be. I mean, look, all the people that were buying here, all the way down to here. Now you get a pop up. I think some short-term traders are going to want to take it off. And then you talk about super extra major support here. You're right, Dennis. That $66 level is key to the long-term, long-term health of this stock.
And these,
We know
These
Go
comps
ahead.
are always so important for Yum, and specifically the Chinese comps. Those were down 4% during the quarter. U.S. comps were down 2%. Analysts had been looking for a almost 2% gain there in the U.S. And volume is really light today. I don't know, for whatever reason. It doesn't look like many shares are crossing.
6,600 shares this morning, but we were trading quite a bit there last night. So, and it's trading quite a bit of volume right in the whole 69 area. I think 70 was a bit of an overshoot. What did we get up to, Joel? 70.
70.44. You also had a high in the
Yeah.
23rd at 70.68. A little gap up to the $71.11. I mean, we've seen this so many times. You know, these stocks sell off in the earnings. People get stuck. Then you get the pop. I mean, you need the follow through immediately off the open through 70, through 70 and a half, through 71, or I think you'll fall
I don't think
prey.
you're seeing that at all. I think it's just a little bit too overdone, especially those comps weren't that great. If this thing starts taking out, what's the pre-market low been like in the last couple hours there?
Uh,
Six.
Yeah, I was just looking at that. It after it made that high, came down to 68 and a half. So if you want to give yourself some wiggle room there, I guess 68 and a half to basically 68 and a half to 69 and a half. Dennis, has been your range in Yum since
Since the May
since
report
after the
last night.
close. Yeah. So keep an eye on those two levels.
McDonald's, we'll talk about them in sympathy here
McDonald's.
because they often do move in sympathy. And you want to talk about support. We're going to show you some major support areas here in the charts. Look at this Mickey D's. The last 4 days lows, 92.87, 92.95, 92.91, and then yesterday's low 92.95 or 92.91 too. So you've got four lows within like a dime of each other on a $93 stock. Yesterday's range, insane. It was up at 94.74, then all the way down to the 92.91. It is popping a bit on the Yum earnings. It actually was just ticked up, just very light volume to 93.33 here, but that is super duper major support.
It was almost identical ranges the last 2 days, believe it or not. 94.55, your high on Friday, 94.74 yesterday. Then the two lows, you mentioned the lows in that area. Obviously, what's happening here is someone's targeting the $93 level, and they're letting people take in under 93, and then they're coming up and just scooping out the book over 93. You closed over 93, so that's good, but not by much, 93.02. Looking for that level to hold. If you do get a total washout in the market, breaks out that level, I think we could be going like to $90 on that thing.
That's just huge. It needs to hold there. But I mean, support is support until it's broken. So a lot of times you want to wait on these things, especially with the market rallying here today, especially with the big decline that we've had. Some stocks are sitting on support, and they sometimes do bounce the first time they come down there too. Now, this has been there 4 times in a row. But look at IBM here. This is an interesting one
Yeah.
because you were talking about super duper major support here. Well, this IBM got down in October to this whole 172.57, 172.70 area. In December came down, tested the same area, 172.73, basically put in a double bottom right on the money. 2 days in a row, 172.73. Where's yesterday's low? 172.72. It's funny how on a $170 stock you can keep finding the same level almost to the penny. It is bouncing back here this morning. It's trading up in the 173 handle. That's obviously the level we need to hold on IBM is 172.5. You think we hold or you think we take it out?
I mean, you're getting a lot of pressure down here. You traded down in this area back in October. You came back again and tested it in December, and now you're coming down. So really, it's it's not a triple bottom or a quintuple bottom. What do we call it?
One, two, three, four, five, six. Isn't it sextable?
Yeah.
Am I saying that? Or septable? No, that would be 7. I think it's
Sextuplet?
Oh, there you go. Yeah, that's
Sextuplet
yeah,
or
like
sextable?
No,
Something
it's
like that.
maybe in Canada.
Are we allowed to say
sextuple.
sex?
Rudy
Sex-
Sextable.
sextable.
I'll look this up.
No, you're right. You're right because like when someone has 6 kids, they're called sextuplets. So
Sextuplets, okay.
that's a key level for it to hold, and if it doesn't, you could be seeing the next low. And believe it or not, Dennis, you got to go back to October of 2011. It traded down to 168.88. But you always complain, and when I give you bad trades, but you wanted to buy this thing at like 176, 177. Remember
For
that?
my investment portfolio, yeah, a few days ago I was looking. I'm still kind of looking at this one.
Why?
As
Why
an
do you want to buy
investment.
this? It's the worst looking chart you could see, Dad. You're you're a Momo guy. You like to buy
It's a
things.
very different, and maybe I do this wrong, but I almost invest differently than I trade. So maybe I should start to do. I always try to buy cheap stocks when I invest, and I try to buy Momo stocks when I'm trading. I want to flow with the momentum there because momentum turns on you, you get crushed too. Maybe I should just start buying momentum stocks in my investment portfolio and ignoring them on the. But I was looking at IBM just because it's supposed to make like $15 or $16 next year. Still got the 2.2% dividend. The company is fundamentally really solid there. It's something I don't have in my portfolio. I don't know if I've ever owned IBM in my portfolio. And I was just looking at this. I was like, it could be a nice addition. I'm sitting on a pretty good chunk of cash right now, and I'm looking to put it to work. And I was looking at this big level, and I was like, maybe it does hold. Maybe it does. But I thought Newmont was going to hold too, and that didn't. So
How did Apache APC do? That's not
APC. We're going on a weird segue here too.
Well, the
Did
reason I
APC
brought that up, APC, I meant Anadarko. SF Bright TG's popping in here that APC missed. And what's up with these oils? APC missed, and you have some of the oils trading up here. So I just wondered, do you have the numbers on them?
Yeah, it's 70. This was last night, actually. 74 cents versus 91, so they did miss here.
Whoa!
Yeah, so that is a big miss. There's something else there to that, Brent, because I'm just looking at that, and they look like they missed, but the stock is trading higher here. It does look like a big miss.
I see a gap loss of $1.53 per share. It looks like they had a huge charge in there of $2.27 per share, so you get to that adjusted number with with a little bit of simple math.
Well, this sounds like all bad news, but the stock doesn't seem to care. It's trading up here in the pre-market at 50 cents.
I don't really
Is there
see
any
a
good
ton
news? Or is this just the fact that all the market's leaning the wrong way
looking
here?
at some volume, some production volume there. That doesn't look to be especially good. I don't see anything that would be especially good from this report.
Look at this $78 level, Dennis.
Big.
Yeah, what is with that? I mean, you had the one spike down. I think that spike down below 78, I think that was like lawsuit related or something over a merger, and someone was personally responsible for all the money or everything, and that took it down hard. But ever since then, someone's been making a stand here at the $78 level. Pre-market trading, you've come down pretty hard here. That low, that bogus low that we probably will not see today was at 74.94. But still, that 78 has just been a key level. So many lows at that area. Trading 61 cents above it. I'd have to say, give it a try again there if it comes down to 78. If not, it could be a slippery slope after that. Did you see ExxonMobil got under 90 yesterday?
Wow, 90 was always big. Remember the 90 number on ExxonMobil, how big that was back in the day? I don't even have to look at the chart, but I just remember that number. There's the goldfish memories working. But 90 was just absolutely enormous forever. We couldn't get up. Then we finally did take it up. Obviously, over the last November, December, marched up over 100. But here we are, back at $90 again, and we did take it out a little bit yesterday. Got down to 89.64. So anybody that was triggering or sitting stops below 90, they hit those and took those out. But we're back up over 90 this morning, trading at 90.39.
Yeah, we came down to that $90 level. That was a low. You had a low at, what was it, 90 right on the nose, and that was back in. On November 4th, you hit 90. You got below that level yesterday. Let's see if you can make a little bit of a double bottom or triple bottom here. This is starting to look like, remember before Warren stepped in and you had like those 18 out of 19 down days or something? This whole period here, I even have to go back farther here. Perhaps take a look at the weekly to take a look at. He had all those down days, and then it bottomed around 86 here.
There wasn't like September to October or something, like
Yeah.
21 out of 22 days it was down.
Yeah, it was. It was this area right back in here when I was buying all those 86 calls, the weekly calls that expired
on you.
Yeah, but this was it. This was the whole area, and this is there. You had to move from 96 down. You had about an 11-point move. You're getting a similar move here from the all-time high up in the 101s here back to the 90. I'd like to see it hold this 90 here for a couple days, perhaps turn up, but big down move here for ExxonMobil.
Needs to hold yesterday's low 89.64. We're up 11 points here now too, so it does look like a lot of things are going to try to open quite a bit higher here. You would think with the S&P futures trading this much higher, so maybe that bodes well. Another big level I was going to look at too is Procter and Gamble. Joel, look at this whole 75.20 area. We didn't quite get far down there yesterday. We only got down to 75.60, but the day before we got down to 75.26. And if you go back to October, major support down here in this whole 75.20, 75.30 area, just multiple lows for like 5-6 days in a row in October. It's funny how these levels work. The stocks will cascade through a level through when there's nothing really there. When you get to a level where it made 4 or 5 bottoms back 3 months ago, they always seem to bounce off those levels.
And the crazy thing about this stock too is the day that you almost got crushed on your short. Remember that? That was
Actually, I forgot that already. What was that?
that was big
I
back.
can't believe I forget that already. Oh yeah. That was the earnings day.
Yeah, it was the
That was
earning.
ridiculous when the stock went from like $78 or $79 all the way up to almost $82 on those earnings. And I was like, these earnings weren't even that great. And then the afternoon it gave it all back. Of course, I get shaken out and end up losing a little bit on the thing. If I'd hold it, I'd been fine.
Yeah, no, that's but it's funny how they just juice that thing. When the earnings come out, then they take it down. This $75 level is very important for the issue. Boy, this has not been down. When did you say that? Wow, it hasn't been down here since October here. Multiple lows, actually a little bit higher than this. Had a bunch of lows at 75.20. Yesterday's session, you got down to 75.60 the day before. This kind of broke a little bit ahead. This made its low on Friday at 75.26. Only got to 75.60 yesterday. So when you're considering, the S&Ps took out the low on the move by, 30 handles, and this thing held up, didn't take out a new low, showing a little bit of relative strength here in Procter Gamble.
Looking at, they want to go to the pot stocks. Everybody's talking about, we had Alan Brockstein there on the show yesterday, and he was telling us about the pot stocks, and he was talking about full, which he actually had just talked about on the show. If you were listening to the pre-market show, holy cow, that FULL, that article came out that he was interviewed for, and wow, that FULL just popped, man. Everybody jumped on the FULL bandwagon, and they are jumping on it more here this morning. This FULL, since Alan mentioned on the show, was at like 743 when he mentioned it. It's now up at 805 the next day. So props to Alan Brockstein, who is all over this.
Yeah, Alan's. I mean, I tell you, he is all over these stocks, and he does his homework. I like what he says. He's honest about it. He's like, a lot of these stocks don't even deserve to be traded. But the ones he does his homework. Now this one is basically they provide capital, right, to these companies that in the industry.
Didn't he say they have some warrants or something too, so they get some exposure to, which one was it, like CANN, I think it was, Advanced Cannabis Solutions, and they got some warrants or something too. So it's like their exposure is obviously only to the upside there, and they can lose obviously the loan, but it's not quite the pure exposure as if you bought these things outright. So it's a different way to play it.
And I think it was a good question that was asked by me was, how do you play if you don't want to play the actual, pot stocks? How can you capitalize the suppliers or the people that are providing capital? And this came to the top of his list here. So I hope our listeners were paying attention here, because that was only brought to you by Benzinga's pre-market prep, that exclusive.
We broke that one.
We broke that one. Yeah, man. We're getting good here. 820 was the pre-market high. You just hit that a few minutes ago. Now look at, if you go to the daily's charts here, this is an interesting level here, because you had multiple highs just over the $8 level. Boom, boom, boom. Where do you got to go to here to get those $8?
October, I'm looking. You got like
October,
817,
November.
820. Yeah.
So when things move on news, Dennis, don't you like to see like the immediate follow through? Like, hey, not even have this thing open up at 810, 815, and then not even stay under $8. If the move is really going to move, have an effect on these things, because if it can hold that $8 level, I see some other highs here. It's not that far away at the 820 level. So see if you can get some follow through, but really like to see it hold the $8 level off the open.
This isn't even really news, though. This is just obviously Alan's opinion, which was then brought to you through the street. I even saw Jim Cramer tweeting that article that Alan was mentioning. So this article just had major following. I think it's popping probably just because the street.com or whatever is covering this now, and they had that in the article. This was 3 of the stocks that they were focusing on. I forget which the other ones were, but full obviously benefiting big time from it here as a potential pot play. They're talking in the chat about a few other ones too. Alan did mention GWPH on the show there yesterday as a different way to play it as well. We're getting Lee Rank, I believe. They're coming out. Brent, did they come out and do something on GWPH here this morning?
Started it with a buy, and let me get that price target for you really quick. It was actually, maybe I don't have a price target. It was an outperform rating, just to correct that, though.
Okay. It's actually pulling back here a little bit here this morning. I guess it got a decent pop there yesterday. Probably that Allen, man, he's got that whole following there, and it was popping up $58 yesterday. It pulled back close to $55.39. It's pulling back another 48 cents here. These things are wild. I mean, it's hard. You know, this stock was a $30 stock back in December. Even Allen was saying that. It's hard to say you should buy it when it's rallied almost 100% here in the last month and a half. But these things can kind of go anywhere. There's just the new what everybody wants to be in is these pot sector.
Yeah, and I think also you gotta Kramer's had started following these stocks here. I think that adds a lot of credibility to the sector. A lot of people follow him, and I think that's why you got the boost. And people are looking, hey, buy an $8 stock that's just kind of been hanging out, or take a ride on a $55, $56 stocks. I think people are looking at this risk reward ratio. JDot's piping in here. Hey, is this sector getting crowded with the analysts? How that's a kind of a scary thing. Like all these analysts piled into these 3D stocks, right? And you had a nice move and follow through, but they were all getting all giddy at the $90 level. Dennis, are you going to put on the contrarian hat here with the analysts piping in, or?
Well, how many analysts are really piping in here, though, Brent? Is there like a lot of coverage on these things, or is just a couple analysts just starting to cover this area?
Give me a sec here. I'll look around to each of them.
Yeah, look around in a few, and I don't think the analysts really have that much coverage here yet. This is obviously, though, and that being said, when stocks are going up 100% in a few days, or 100% in the case of GWPH in a month and a half, I mean, I never like chasing anything like that. I'd wait for pullback, but I don't know that. And like Alan was saying too, maybe a lot of these companies, who knows if some of these even survive. There's all these different pot stocks, and he was saying, maybe half of them aren't going to survive. So it's sometimes tough to pick out the ones that do. But it's always scary when you start getting into these markets that are getting a little bit overzealous, and everybody's jumping in, and everybody wants to be in these things. I mean, when you watch this full stock pop just because they loaned some money to some, got some warrants to the one cannabis company there, and it's popping 10% on an article, it's starting to seem a little bit ridiculous too. But we know the stuff can continue to be ridiculous, so I don't know about jumping on and shorting this thing right away either.
No, I definitely wouldn't recommend shorting them.
So looking at GW Pharma, there are currently, I'm seeing 5 analysts that are covering this one, including Lee Rank, Piper Jaffray with an overweight, Canaccord with a buy, Cowen with an outperform, and Roth Capital with a buy rating. And I just looked around at a couple of the OTC names and couldn't really find any coverage on that. Medical marijuana, I didn't see. Pot, PHOT, that's Grow Life, I believe, didn't see any coverage. That Arrow, I didn't see any coverage on that one either.
Who was the first one to hop in on GW Pharma? Can you tell that on a historical basis there with your information? Because
But they probably got other stuff too, don't they? Or is that it? Are they just?
Let me
Alan said there yesterday.
Let me look at Lee Rank. The Lee Rank analyst, Joseph Schwartz, he covers a bunch of pharma names, but I don't see any of the pot names. It looks like GW might be the only one.
See, there's not a lot of coverage in this area yet, and I think that's maybe speculation too, that there's gonna start being some coverage coming into this area, and that will propel these stocks even farther here. Obviously, when you get one just mentioned in a Street.com article and it's popping 10% because it's got pot exposure, there's obviously a lot of people that want to be exposed to this area and they're chasing. And I don't know if it's the thing to chase, but maybe it is too. And these bubbles can happen, and they can keep getting bigger and bigger. And some of these stocks are starting to get into some bubble middle area. But that full one yesterday, though, if you picked that one up, that was not even starting to move yesterday when Alan mentioned it. And it took off here, and it's taken off here this morning.
Dennis, we did just get your Clorox out. It's trading down. Looks like it was not too great of a report. The EPS figure missed 88 cents. Analysts were up at about 91 cents, and then it looks like they also cut their fiscal year guidance a tad.
Ooh. Stock just trade down all the way down on that report to $84 even, bouncing back a bit here now. It's bid at 85.01, and odd lot just traded at 85.5. So 84, a bit of an overshoot there, but it starts getting back up here near where it closed, $86. I believe the low yesterday, 86.06. So probably the old support from yesterday could become resistance.
Did break down to 84. Not a lot of volume. Got to pop back up here, back to 85.5. But I'd have to concur with you here. You had the lows at the $86 level, 86.07 yesterday. So needs to get back above that level in order to rally. Dennis, your scenario of going back and taking out yesterday's low now is kind of falling by the wayside. I think I should have went on lunch on that.
You're saying just because we've climbed another 2 S&P points that we're not going to go all the way down and test 1732?
Yes.
Is that what you're saying?
Yes.
Okay. You know what? I'll even be nice to you. I'll give you another opportunity on the lunch. I think we actually, I don't know. It's 11 points, so that's a long ways to go now. You're right. But I think we do. I'm not going to bet on it, but I still think we do take out yesterday's low.
God,
What was
this
yesterday's
guy's
low?
so tough.
1732
Look,
and a
he's
quarter?
got a 10-point lead in the S&Ps, and he won't even give up one of the 2 Potbelly lunches I owe him.
10-point lead in the S&Ps. You have the 10-point lead in the S&Ps. I'm saying it has to go down the 10 points. So that's you should do me like a 2 to 1. Like I need some. You got to give me some leverage here or something. Give me 2 to 1.
How about
on that?
How about 3 to 2?
3 to 2. What are you going to buy me? Half a lunch? You can buy me a pop and a half a sandwich? Oh, I'm not betting.
No,
I'm done with your betting.
If I win, I only. Well, how many do I owe you?
I don't even know anymore. You're so in debt right now. You're like the U.S. government here.
I think it's like 3.
It's 3?
I think it's 3 Potbelly lunches and a steak dinner. You're just so in debt, Joel.
Okay.
I think we take out yesterday's low. I do think we take out the low. I think we shake everybody out, and everybody's like, they were all leaning on the low. Go down like 17.25 or something, and then bounce and close positive.
Okay.
I'm calling for a little bit of volatility here today, despite the lack of volatility here in the pre-market.
This is the thing. If I lose, I owe you 6, and if I win, I only owe you 1. So you still got a lunch.
Okay, I'll do that. So you're going to owe me 6 lunches?
Yeah.
Am I ever going to get paid any of these lunches?
When you come over to the Benzinga World Headquarters, for sure. Okay. All right. Let's cover.
It's got 1732 and a quarter. That's the number. Tick 1732, and you owe me 6 lunches.
Oh God.
You are getting so in debt, Joel. You're just gonna have to take out a second mortgage on your house or something.
Can you come over to my house and
lunches.
can I make you a turkey sandwich? If you come over to my house.
I'm gonna get to come over for dinner. He's gonna make me sandwich. No, it's got to be the PB. Get long PB, boys. Lots of lunches coming Denny's way here on the PB.
I think you need some.
That stock keeps going down every day. They're obviously not listening to me and Joel's bets.
I think you need some enforcers, Dennis. You need Tiny and Mo to come knock Joel's knees out. I think.
Gotta pay up. Let's go to a few of these upgrades and downgrades here. There was a couple big ones here today. Pfizer, which had a great day yesterday, despite everything down. Pfizer actually, well, I guess it was having a great day. It was up as much as 31.69, which was up like $1.20 there yesterday on their drug news. But it pulled back and closed near the lows on the low at 30.60. It is popping here today. Jeffrey's jumping on the bandwagon, upgrading Pfizer here, and it's back over 31.
Yeah, it did get up to 31.69, and on good news on the drug front. We talk about a lot of times that's what moved these stocks besides the earnings. If you were paying attention to your charts when it got up to 31.69, you would have went back back on December 6th, and you hit 31. No, excuse me, on the 9th, you hit 31.69 right on the kisser. Then you had a couple days where the highs were within 12 cents of that here. So good resistance there if you get back into that area. Getting a little bit of a bump here in the pre-market, trading up on the upgrade. Made the pre-market high at 31.13, but like to see what happens here if it can get back up to that 31.69 level.
We got Merck getting upgraded at SunTrust here this morning. It's trading up to 52.75 right now. Went out at 52.08. Found support at the big hole number basically yesterday. Well, got down to 51.92, bounced a bit. Getting back up to yesterday's high right now, though. Yesterday's high was 53.15, so we're just slightly below that right now, 52.75.
Yeah, the stock's been a champ here. I had that gap and go level, held 51 on a couple occasions. Now buyers have moved up to the $52 level. Closed right off the low yesterday at 52.08, 51.98 low. You had another low at 51.78 going back on the 29th. So split those two levels, call 51.85 major support.
Looking at a few of the Momo stocks, which were getting crushed yesterday. Google was down as much as 40 points at one time. I don't remember where it closed down. Actually, I think it did close down 40 points yesterday, or over 40 points. It's bouncing back $11 here today. So this is just moving around with the market now.
I wanted
Also,
to
you
ask,
got,
yeah, I wanted to ask you about this Google here because,
yeah,
and maybe we could relate this to the Procter and Gamble,
okay.
where the street loved the earnings, popped the stock. You know, you didn't like the earnings. Google comes out, crazy range on the day of earnings, rallies up, makes a new all-time high here at 1186.54, and then gives a lot of it back. Now, the close on the day when they released earnings was 1135.39. We closed 1133.43. So basically, it closed in the same area. Could this be another Procter Gamble scenario when people are now going to look at the numbers and say, hey, they're not that good and take the stock back down?
Well, the numbers weren't good. They were just the bottom line good. I think it was jumping up because of the crazy split that they were doing. Because if you looked at the initial report with Google, remember it went from like 1133 down to like 1094 on the initial report when they missed on the top and missed on the bottom, and it looked like it was going to be a really bad day for shareholders. And then it just bounced up in the next hour all the way up and basically rallied 100 points because the high in the after hours I think was up at 1194. And that was all off I think that split news. So and then it hung out there, and we actually closed strong, but then opened kind of into that area yesterday and just straight down. And when the market falls, S&P futures fall 40 points, they're going to knock the stocks that have been the ones that were moving with the market the most, which is the Googles, which is the Twitter types, and which is the Facebooks, and they were crushing that kind of stuff there. Well, actually, Twitter held up well yesterday, but they crushed Google.
Right. Well, we'll see. I'm going to watch this 1135 area. You are getting a nice couple, a nice pop off that in the pre-market. It doesn't hold 1135 here over the next couple of days. I think we go back down to that $1,100 level. But I just think it's interesting when you have all the volatility after the numbers release, you make a new all-time high, then you come back to that level. So I'll be looking at that long term. And look at those S&Ps go, Dennis. 1744.75.
I need a 12-point sell-off now. I need the sell. I'm going to go out there and start selling those S&P futures so I can get those pop belly lunches.
Okay, we
So,
gotta take a quick break here because we have a very special guest coming on. We have Steve Claussen coming on from OptionsHouse, and he's their chief investment strategist. And we talk a lot about options, but here's a guy that knows how to trade them, and we're gonna bring him on here in a minute and get some good pointers on trading options. We'll be right back. Welcome back, traders and investors. We have a special guest on today, Steve Claussen. He's the Chief Investment Strategist at OptionsHouse. Steve, how you doing today?
I'm doing great. Trying to stay warm in Chicago, but all this market volatility is creating a lot of opportunity. How are you guys doing? Thanks so much for having me on.
We're doing good here, Steve. Yeah, I'm very interested to hear about these weekly options here. This is something that I've been trading for the last year, just kind of playing around with them, trying to find some different strategies and stuff. So very interested to get your thoughts on that here today.
Yeah, I think it's an awesome topic for retail investors. Quite frankly, it's probably one of the best creations by the exchanges as far as acceptance by the investment community that they've had in a long, long time. These options have been so remarkably popular, and the liquidity bears it out. That, I mean, it's just another case of the market right now. It's such a good place for the retail investor. Spreads are tight. There's so many options that these weekly options, you can really focus your exposure to a specific event or a specific date and time. I mean, it's incredible. It's a great time to be a retail investor. The playing field's never been more level, and the weekly options have really helped that. The real basic premise, right, is options are coupons or these contracts that have an expiration date, and when you use a really shorter term expiration, the focus is really on that period of time, and that's one of the advantages. A lower premium. You don't have to. There are two aspects to options pricing, which can make them kind of complicated. One is the directional exposure they provide, but the other one is the exposure to the volatility and changes in that expected volatility or the expected movement of the underlying stock or index or whatever the option is based on. And that's the part that a lot of retail investors have a lot of trouble with, is the changes to implied volatility. I often hear, I do a lot of education of our customers, and I often hear saying, hey, these options don't work. I bought this 3-month call. I couldn't afford the at the money one. I couldn't afford the in the money one, so I bought this out of the money call in Microsoft. I bought the 40 call. Microsoft went from 33 to 36, and my call option went down in value. These things don't work. And what he got wrong was the implied volatility. The collapse of the implied volatility offset the delta or the exposure to the direction. With weekly options, it's really, really focused. So one of the advantages is a lower premium, a more focused time. However, the disadvantage, nothing ever comes free in options. The disadvantage is, they're wasting assets. They expire, and the expiration date being so short, you have to be right away.
It's all timing, yeah.
Lot better. They're doing a lot better than the single stock futures, huh?
Single stock futures not quite as popular with the retail investor,
Correct.
right?
Okay, you've already touched on some of the advantages and disadvantages of trading weekly options. Just could give a scenario here where, I mean, a lot of people like to go into the stock, and what is needed? Like, if you're going to trade a weekly option, what do you need? What is there a catalyst? I mean, there has to be a specific reason, because you're really going short term here.
Yeah, you're right, but I will tell you about options generally, right? You need to have a reason to be involved in the stock before you would even enter into an options position. From my standpoint, from most retail standpoint, right? The one advantage that retail investors have over the professional trader, and I traded options professionally for years, but the advantage that a retail trader has, and they really need to focus this, I think, is they have an opinion. They have an opinion about the underlying. Whether it's they know the products, they fundamentally know it, they technically follow it, you guys were talking about the green rush and everything. Maybe that you focus your attention on something like that, and those options or those stocks actually don't have options yet, but they have an opinion in the underlying stock, whether it be for a move higher, or bullish sentiment, or a bearish sentiment, or maybe it's going to be range bound. And once you have that opinion on the underlying, then options make all the sense in the world, and weekly options even more so, possibly, in that you say, what do you need to have? What do you need to have a catalyst? Do you need to, we're coming out of earnings season, right? And for earnings, weekly options are spectacular for events, for FDA trials, for PDUFA trials, for whatever else. Fantastic instruments because it isolates the event. So having a catalyst is great, but not having a catalyst is great as long as you have an opinion, right? I mean, the market was down 40 S&P points yesterday, a disaster, right? It's bouncing back today. If you were saying, hey, I'm nervous, but I want to dip my toe in, you could choose to buy stock right here, or you could choose to use the options and maybe even the weekly options as your entry point to set an entry point to jump into the market, and perhaps we'll talk about a few strategies as we go on here, but once you have that opinion, and it doesn't necessarily have to be catalyst based, now that earnings are past for a lot of symbols, but weekly options, I think what really is important, because they are so short, is you have to have the time to really monitor your position as long as it's open in a weekly option, because that expiration is so short.
Right. Just for example, I mean, if you wanted to take exposure, a lot of times that people like to fade the close. If you wanted to take a flyer, let's say on the Spider 174.50 calls or the 175 calls, even thinking there'd be a rebound overnight because of the short expiration of volatility. If you had an exit plan, I mean, you could without having the overnight exposure of the S&Ps opening down 30 points, you would have a defined risk, going into the trade. And, as the market's going up here, it gives you an opportunity to take some profit.
Absolutely. You talk about defining your risk and having an exit plan. Options by definition, they have an exit plan, right? They have an expiration date. Something's going to happen before that expiration date. And so it's real important. You touched on a couple things. You touched on defining your risk, critically important. That's something that options allow that just straight stock purchases don't allow, and even stock with disciplined stop losses below and above, they don't really provide the dynamic hedge that an option provides. So to define your risk, critically important. An option, you can't lose more than 100. If you go on the long side, you can't lose more than 100% of it. You wanted to play a little rebound in here. I mean, this is why these weekly options are so good for all types of traders. I know your audience is day trading, it's swing trading, it's longer term traders. For all of those types of trading styles, options and weekly options have an application that can be used. I mean, if you're a little swing trader and trying to fade yesterday's ugly close, right? So yeah, what did you talk about? The just buying something in the macro SPY, the general market or something? Right. I mean, we're going to have a 10, 11 point rally in the futures here. So you'd expect that that would translate to about $1.20 in the SPYs. I actually think when you are looking at options from a stock trader's perspective, you should use the delta of the option as an indication of the percentage of risk of stock ownership that you have right here, right now. Delta is a lot of things to a lot of people, and the Greeks and options can scare a lot of stock traders away from options. But really, all they are is indications or indicators off the model of how the option is priced. And if you look at the deltas range from 0 to 100 on the call side, and from -1 to 100 on the put side, right? It's the hedge ratio for professional investors. It's a rough approximation of the percentage chance of finishing in the money at expiration. It's a lot of things, but it's also the percentage of risk of stock ownership. So from a stock trader's perspective, if you look at the delta, and an at-the-money option typically has about a 50 delta, which says you have 50% of the exposure, 50% of the risk of price movement that you would have in stock ownership. So if you were looking for a real short-term trade, a little swing trade, a little bounce in the morning, and last night you came in and said, I want to limit my risk. I don't want to just go in and buy the futures. I don't want to just go in and buy the SPY stock. But I want to limit my risk. But I think this is overdone. I think there was a lot of panic in the water at the end of the session yesterday. And you came in and you bought sort of a 70 delta option. You'd be looking at the 172 calls. I think that option will perform 70% of the that will perform 70% of the way that the stock will perform, and that's a lot from a stock trader's perspective. That's a much better instrument using an in-the-money option because it acts a lot more like stock versus an out-of-the-money option. True, the out-of-the-money option has a lot less premium, but with this bounce, you'd expect the volatility to come in a little bit. And even though these are really short-dated, these, February 7th, they expire Friday, right? 4 days from now. They still have a volatility component, and implied volatility changes a great deal on the shorter-dated options. Vega, or the exposure to that volatility change, is a lot less. But if you use an in-the-money option rather than an out-of-the-money option, you're still paying. Those options went out last night at under $3. You're paying $300 or $298 for 100 shares of exposure to the SPY based at 172 level. They provide awesome leverage in addition to the that's $17,000 worth of stock that you're controlling by owning that in-the-money call option.
That's the one.
Little swing trade.
And I just want to stop you there on the whole leverage thing. I've been playing the weeklies here for probably about the last year, and I love playing them. And I don't know if I suggest all our listeners do this, but I love playing them on the actual day that they're expiring because of what you're talking about, that leverage. It's like I'll buy an option if you even like a couple hours before they expire. Let's say 2 o'clock and it's expiring at 4. If all of a sudden I'm starting to see that, well, I think there could be a big move in this thing. Sometimes I can buy an option that's like 20 cents out of the money right now for like cents, like pennies, and give me huge exposure to a move if I think there's going to be a big move in the last couple hours in a stock. And so sometimes what I do is I go and pick up, I almost call them like lottery tickets, and that's kind of what they are. I always say like 4 out of 5 or maybe sometimes 9 out of 10 expire worthless. But that one that I get more than makes up for the 9 losers, because sometimes you'll pick up an option for 3 or 4 cents and sell it later for 40, 50, 60 cents a couple hours later if that move that you think is going to happen actually happens. So there's so many different ways to play these things.
Powerful. That's an awesome, powerful scenario you talk about, but it's critically important when you do that to know if you are considering them like lottery tickets. Not, obviously you're not putting a significant percentage of your investment capital at risk by doing that. That's on a tiny little fraction to just, sort of give you something to look at the rest of that trading day. But the more important than that is you need to have an exit plan, right? You're buying this thing for 3-4 cents. You need to know the day trading rules. You need to know the day trading rules. You need to know the expiration and the exercise and assignment rules associated with that option. And you need to have an exit plan. You can't just say, I'm going to buy these for 3 cents. It's a lottery ticket, and then sort of look at it at the end of the day, even after the options have closed, and then you see, it pinned strike, or the stock is right at my strike price. So that one, went out worthless. If it's a penny in the money, the OCC, the Options Clearing Corporation, automatically exercises that for you, for your in your account. And then all of a sudden you're long 100 shares, 200 shares, however many contracts you bought of stock, which is obviously a much different risk profile. So it's critically important. In fact, if I'm coming off a little too cautious on that, on expiration day, too many customers think they'll get into these weekly options, and then they don't think they have to get out of them because they're, if they're 40 cents, they're going to sell them. But if they're only, 2 cents and they bought them for 3 cents, they're going to just ignore them. You need to close that out or tell your broker, do not exercise. Otherwise, you're going to be sitting with a large stock position. They are incredibly powerful. They do provide leverage, but that's where some people get in trouble, and you really need to be disciplined around efficient use of that leverage.
It's a great point, Steve. And just to follow up with you on that point, like I've been trading for 15 years, so I've done a lot of these things. So as a professional, I do like trading this kind of stuff. But if you're a little retail guy, that risk, obviously, if that thing, like you said, closes a penny in the money and all of a sudden you had 20 contracts, like an option on Apple, and all of a sudden you have exposure to 2,000 shares of Apple overnight, that is a very scary scenario. So you definitely have to really understand those vehicles before playing those strategies, because you think you can only lose 2 or 3 cents. But if you don't know what you're doing and all of a sudden it does close in the money and you get exercise, and all of a sudden you have that huge exposure to that stock, it can get real ugly for you in a hurry. So that's a great point. You mentioned one other thing there too. You talked about that it could pin at the price. I've noticed, and obviously over the last few years, and especially in the weekly, sometimes when you have a huge open interest on a specific strike, that sometimes the actual price of the stock will gravitate towards that strike price as the expiration as the expiration approaches. That's kind of called like pinning. Can you just explain that to our listeners?
Absolutely. The whole concept of expiration is critically important to understand before you enter into any of these strategies. And because weekly options expire every week, you have that expiration event that many more times. So real important to understand all the expiration nuances, just to hammer home that point one more time. And then what tends to happen with some stocks is this concept that you mentioned called pin risk. And what firms tend to do is they actually research it, and they look at abnormally large open interest relative to average daily trading volume. And if you see larger open interest and the stock price is somewhere close to that strike price, the stock can tend to track towards that stock price. And that is due to the nature of professional market makers on how they hedge their exposure in those short options, or in those options that they provided if they're on the short side. If you're short an option, whether it be a call or a put, at the 175 level, and the stock is sitting at 174.5, below the strike, you need to buy stock. If you're long the options, below the strike, you get to buy stock, whether you're long the call or long the put, right? Because at expiration, that call option, which gave you positive exposure, that long call option gave you positive exposure, is gravitating towards a zero delta, zero exposure to the stock as it expires, if it expires out of the money. So you would take your hedge, which would have been short stock, and you'd take it off. You'd buy stock. Also, if you were long the put option, you were long stock against that as exposure, and that put option is gravitating towards 100 shares of stock, and your hedge, when it had time to go to expiration, was less than 100 shares, so you're buying stock again. So long option traders are buying stock below the strike, and then if it goes through strike, now they turn to sellers. So there's this natural supply and demand, or unnatural supply and demand, for one day as they're expiring. That is offers of stock above strike, which would obviously, when there's more supply, it would push it down towards strike. There's buyers of stock below strike, so that would sort of tend to push it higher towards the strike. So it's kind of a natural occurrence of an unnatural phenomenon called option expiration that just makes, that's sort of why it happens. That's why it tends to happen that these stocks that move around dramatically the whole day, all of a sudden Apple, like, how do they pick? It ends right at 505, right at the strike. And Apple's obviously a very liquid stock, but towards expiration, people are taking off risk, and people that have options coming off are looking to monetize the last little bit of value that option has, and they're buying stock below and they're selling stock above, which can cause the stock to pin. And how many times? Google, Apple, they all finish within a penny or two of the closest strike price that has significant open interest. And when that happens, real important to understand how expirations work. Whether you're long options and it's a penny in the money, the OCC automatically exercises that option for you. You have the right to not exercise it, and you have the obligation, as we're a self-directed broker. We rely on our customers to take the right risk management for their own positions, to take those positions off before expiration. But more critically, if you're short, a credit spread is a great retail trade. Limited risk, limited reward. A lot of people use these in weekly options. And, a credit spread, you get to keep the premium as long as the stock is, on the put side is above the short strike, and on the call side below the short strike. A lot of times it pins the short strike, right, for the reasons that we talked about. if you're right at strike, you have to take that uncertainty off. You're short the option. Even if the stock trades and closes a couple pennies under expiration, the long holders of that option are allowed to exercise. The stock continues to trade in the post-market. We see this so often in SPYs where the futures in the last 15 minutes rally another 5 points. It's 50 cents in the SPY. And that option that you thought was safely out of the money is now slightly in the money, and you're going to be assigned. But you have no idea. You don't know until over the weekend when all of a sudden you wake up and you turn this winning trade, this winning credit spread, into a losing stock position come Monday morning.
And it can be really scary come Monday morning too, because you were talking about something, and what I was going to jump on is this unnatural occurrences that are happening when you get this whole penny and you get these market makers that are buying the stock and selling the stock. That supply and demand that exists on that Friday, that supply and demand will no longer be there on the Monday. So what you often see is where a stock, well, all of a sudden the volatility starts to come down as it's pinning on the Friday, the volatility can sometimes completely open up on the Monday because those market makers are no longer there, which supporting the price or providing resistance there. And you can have some extreme moves on those Monday morning. And if you have exposure to that stock, that can be some significant risk that you don't want.
That's a great point. And in fact, right, so someone that is assigned and didn't realize they were going to be assigned, so not only do they have a position that they didn't expect to have, they have a position they didn't want to have, right? So come Monday morning, they're either long or short several thousand shares, and they don't want it, right? And where's the offsetting liquidity? It's not going to be there. So the moves can be dramatic on Monday morning. Exactly. That's a great point that you point out, that come Monday morning, that liquidity is not there. Again, there's not expiring options that have these natural buyers below and sellers above. And so who knows where it's going to open on Monday morning. And again, the one caution that I would say for investors looking at these weekly options is not having the exit plan, not taking off the, thinking that they can open this trade on expiration day and not have to close it, and whether on the long or short side, and turning a winning option trade on Friday into a losing stock trade on Monday.
Okay, Steve, let's shift gears here just a little bit. And I mean, a lot of people buy options, right? And doesn't like a very high percent of options expire worthless, maybe 75, 80% of them. And a lot of that is because of the time premium. Now, there are other ways to play the options market. Obviously, if you're shorting calls or shorting puts, you have a lot of exposure. But there are other ways, to trade options just besides trading them naked. Short-term calendar spreads or vertical spreads. Why don't you just go into those and explain those a little bit, because they give the trader. I mean, you can do the spread, you can do the strike, and then if the position or the stock doesn't move for a couple days, at least you're taking in some premium on the option that you're short.
Yeah, I got to stop you at one point. That's the 80% of options expire out of the money is actually, it's true and yet not, and misleading, right? Most options are closed before expiration, closed either by exercise but more importantly, closed because the long holder sells the option to close prior to expiration. The options that are open on expiration, by definition, if an option's out of the money, there's no bid for it, so the long holder can't sell it before expiration, and he lets those options expire worthless. So of the options that are open at expiration, yes, it's true that 70%, a large majority are out of the money options that expire. People close options before exercising in the money options, so they're not there to be exercised. So it's a little bit misleading, and a lot of people say, options should be sold, not bought, because 80% of options expire worthless. So all that time premium's just wasted. That's not exactly true. However, let's talk about the, these weekly options from the other side, like you intended. Because they're so short term, most time premium options are a wasting asset. They have specific expirations, and they're worthless when there's no time value to them, when there's no time left. A weekly option, let's say a 7-day option, all of that, 100% of that extrinsic value is going to come out of the option in the next 7 days. So again, shorter expiration, a larger amount of time decay each day. 1 day is a larger percentage of the remaining life of the option, of a weekly option, until it becomes 100% of the remaining time, with 1 day to go to expiration on expiration Friday. So a lot of people are attracted to income trades, or trades which make money as the price stays the same and time passes, using weekly options as well. Calendar spreads you mentioned, where you buy a 1 week option, or you buy a 2 week option, sell a 1 week option, or a 15-day and sell a 9-day, and it's an income trade. You're looking to make money on the decay of that shorter dated option, as 1 day is a larger percentage of its life compared to the option that you're long. Condors, credit spreads, people that have larger accounts and higher suitability, straight strangle and straddle sales on weekly options, again, can be real compelling trades. There's a advantage and disadvantage of all these strategies, right? The advantage of playing the short side is the time decay is more immediate and a greater percentage of the options price each and every day with the shorter dated options. Disadvantage is your short gamma, right? A short price move can take you out of the trade and cause a loss based on the dynamic nature of those options. The same power, that leverage that the long holder had, you now have that obligation, in exchange for that premium that you took in. Let's see, what trades should we talk about specifically with weekly options?
Why don't we? Obviously, with the volatile stocks here,
I always like talking about J.C. Penney.
Is there any? Nah, J.C. Penney is an option trading at 546. Let's just take a let's just take a look here. Going in, there's been a lot. Let's take a look at Apple here. Let's just do a possible scenario. In Apple, negative earnings, Icon trying to boost the position here. Just give us an example. Let's say you're bullish Apple, since most people are bullish Apple here. Going in expiration here, something with some limited exposure. Why don't you just walk us through one trade here?
So, not that we wanted to, no buy, sell, or hold recommendation by any stretch, but, Apple was a relative stalwart versus the ugly market yesterday, right? There's talk of them looking to try to get into TV and content delivery and TV type things, right? And but the great thing about the options market, and the great thing about markets in general, is they're fantastic price discovery inventions of capitalism, right? So when the market's more volatile, the premiums are higher, right? Supply demand works, right, if you leave it unencumbered. And so when there's more volatility, when the stocks are moving around more, the premiums are higher, right? The demand for those options is higher. The supply is not filled until there's a higher price paid, and the premiums are higher. So if you were bullish on Apple and you wanted to take a little bounce, say that you think the overall market was a little overdone, Apple came down from 550, right? And you think there's a chance that it pops back up towards that level. But again, you're focused this week, right? In the next 4 trading days, today, Tuesday through Friday. What you might consider is, as a proxy for the stock, looking for that 70 delta option, right? So you're looking at the 495 call, buying that for 875. But now, like we said, the premiums are higher, right? There's a lot of expected volatility in the price movements of Apple, as well as all the stocks, with the market being down so much yesterday. So we're looking at a 22.5% implied volatility on those 495 calls, a premium of about $8.70 on last night's close. So you might want to offset some of that extrinsic value, some of that time premium, even though because it's only 4 days of time that you're buying, right? And the stock yesterday closed at 501, so 495, that has $6.50 of intrinsic value, of parity value. That doesn't decay. But an $8.70 option has $2.20 of extrinsic value, right? And the other thing you have to be aware in Apple is there's a dividend coming up. Is that this week as well. Yeah, that's Thursday, right? It trades ex-dividend, so an in-the-money option. So this option this play would even be shorter than that. You'd say, "Wow, I've got to be out of this option by the day before ex-dividend date because options do not receive dividends. Stock does, and when you buy in-the-money call options or you're short in-the-money call options, you need to do the calculation of am I better to own the stock or am I better owning the option?" So if you were saying, quick 2-day little swing trade, I'm going to buy the 495 calls for $8.70, and you might consider selling and taking in some premium in maybe the 510 calls. You get about $1.85 for those. So you can take out, you can net on that debit spread. You're reducing your cash outlay at the beginning from $870. You're reducing it by $185.
But you're also limiting your upside too on that.
You definitely are.
Okay.
So you're taking away 22% of your maximum risk, the amount of premium you pay, but you are limiting your potential gain. If you just buy the option by itself, you have unlimited upside to the upside, right? You have unlimited potential gain to the upside. If the stock could go to infinity, right? But in all my years of trading, I have never seen a stock go to infinity. And I will tell you, one of the most important things to realize as a trader is when you limit your potential profitability, you dramatically increase your probability of success. And if traders learn nothing else from this little talk we're having, if they could take that away, I think they would be well served. Because if you're willing to limit your profitability, it's just good discipline, right? Why do people lose money in Vegas? They lose money in Vegas because they say, "Hey, I'm not going to lose more than $500 at the craps table." And what do? They tell you the story about how they were up $2,500. The table was hot. The women were smoking, and then they say, and then what happened? And they said, "Oh, and then the table went cold, and I lost my $2,500, and I lost the $500 I said I was going to lose." Right? They only had a goal. They only had an exit strategy to the downside. They never said, "Hey, if I turn this $500 into $1,500, I'm going to walk away and get a couple cocktails and go watch the sports book for a while." And the same thing's true with options. If you don't have an exit strategy, if you don't have a target to the upside, which by definition, turning a long call into a long call spread, or a long stock and overwriting call options, you don't have an exit strategy. You don't have a profit target. So how do you know when you've been successful? You don't, right? So I love the idea of limiting your upside and limiting the your potential profit. It increases your probability of success. It lowers the amount of exposure, the amount of risk that you have immediately. And is Apple going to pop? Yeah, it could pop $20 today and tomorrow, but are you going to beat yourself up because you bought the 495 510 call spread, potential $15 profit? You bought it for $6.90-ish, $6.90, and you made $8.10. You more than 140% on your investment. You're going to beat yourself up over that.
No way.
If you are, maybe this isn't for you.
Yeah, no, that's great tips, and I'm just looking at all that stuff we discussed, and we've gotten through just a small portion of it. Steve, thanks a lot for giving really solid advice to traders here, and we'd love to have you on again. There's a lot of different things that we can discuss and look at in the options market. It's been great having you on, and like to have you on again. Thanks, Steve.
Yeah, thank you so much.
Thanks,
you guys
Steve.
are doing a great job.
Okay, we're going to move on to Mighty Joe Young with the morning headlines.
I'm here, and today's editorial headlines from around the globe. President Barack Obama's push to provide classrooms with high-speed internet connections will get a boost Tuesday with the announcement of public and private funds that will give more students access to educational technology and the next generation of broadband and wireless networks. A middle school in Maryland will serve as the backdrop for the president's progress report on his Connect ED initiative. There, Mr. Obama will detail $750 million in commitments from the private sector. Companies including Apple, AT&T, Microsoft, and Verizon have made pledges, agreeing to provide an array of products and services from iPads to internet connectivity to schools across the country. President Obama will also announce the Federal Communications Commission's plan to spend $2 billion during the next 2 years to expand its investment in high-speed internet connections in schools and libraries. That will double the FCC's current annual spending on connecting students with broadband service, an FCC official said. Ben Bernanke arrived for his first day on the job at the Brookings Institution on Monday morning, just 3 days after completing an 8-year tenure as chairman of the U.S. Federal Reserve. Bernanke, whose stint atop the U.S. Central Bank was marked by financial crisis and policy experimentation in the face of the Great Recession, joins the centrist policy think tank in Washington as a distinguished fellow in residence, Brookings said on Monday. There had been some speculation that the former Princeton professor would land at Brookings, where he is expected to write a book, though the quick jump from one job to another may come as a surprise. Brookings prides itself as nonpartisan and having members from both sides of the U.S. political spectrum, though some see it as somewhat left of center. Workers at Volkswagen's only U.S. factory will decide next week whether to be represented by the United Auto Workers Union. The German automaker said Monday that it has asked the National Labor Relations Board to conduct a vote at its Chattanooga, Tennessee plant February 12th through the 14th. The plant, which makes the Passat sedan, has over 3,000 workers. Employees have the right to decide by voting in a secret ballot election on a matter that concerns their own interests, said Sebastian Pata, the plant's vice president of human resources, in a company statement. Volkswagen respects the democratic right at all locations worldwide, he went on to say. German law gives labor representatives half the seats on the Volkswagen supervisory board, where some members have raised concerns about the Chattanooga plant being alone among the company's large factories without formal labor representation. The sell-off in emerging market assets that sent the benchmark equity index into the lowest valuation since the 2008 financial crisis may have gone too far, according to UBS AG Chief Executive Officer Sergio Ermati. What we are seeing now is a lot of money exiting the emerging markets, Ermati, the head of Switzerland's biggest bank, said in Zurich on Bloomberg Television's Countdown segment. Short term, it looks a little bit overdone. Global investors pulled $6.3 billion from developing nation equities in the week through January 29th, the biggest outflow since August 2011, according to Barclays, citing data from EPFR Global. The retreat dragged down the MSCI Emerging Market Index's valuation to 11 times reported earnings, a 40% discount versus the MSCI World Index, the widest gap since October 2008, data compiled by Bloomberg showed. A new study from MassFlight puts a price tag on people's frustrations with flight cancellations during the polar vortex. The cancellations cost airline customers $2.5 billion in January. Last month, the polar vortex wreaked havoc on flyers across the country, leading to the cancellation of 49,000 flights. Over the past few years, January cancellations have numbered 10 to 27,000. This huge surge in cancellations means hundreds of thousands of people were stranded, millions of flyers were affected if the flight delays are factored in. PC Magazine reports that Google has opened up the Cast API to all developers. Chromecast launched with only a handful of compatible apps, including Netflix, Google Play Movies, and YouTube. Over the next few months, apps like Hulu, HBO Go, Pandora, and Plex were added. Other developers have been able to work with the beta APIs to get apps ready to go, but they were prevented from releasing anything until the SDK was final. Now that everything is official, all those apps are going to begin flowing in Google Play and the App Store. Keep an eye on your favorite apps for the Chromecast button, which will enable you to blast content of all sorts onto a larger screen. Official support for the Cast SDK is being pushed to all Android devices with the new version of Google Play services. In Philip Seymour Hoffman's New York apartment contained approximately 50 bags of heroin at the time of his death on Sunday, according to multiple media reports. Investigators also found used syringes and prescription drugs in the home of the 46-year-old Capote star, ABC News said on Monday. Police are still investigating the death and are awaiting a report from the medical examiner, which could come early this week. This week or next week? This week. to determine what direction the investigation will take next. Hoffman's autopsy had been scheduled for Monday. Hoffman, who had spoken candidly about his history of addiction, had claimed to have been clean for decades, entered a detox program last year after relapsing. Seahawks fans celebrate the Super Bowl 48 victory with an all-night party and riots. Thousands throughout Seattle took to the streets to revel in the Seahawks victory, the city's first major sports championship in more than 30 years. Drivers honked their horns, fans launched fireworks, and at least one bonfire was blazing near the University of Washington. $25,000 in damage was done to the century-old Pioneer Square pergola during the out-of-control jubilation. About 6 people arrested after midnight when the crowd began throwing bottles at police. Crazed students lit furniture on fire and made bonfires. Just another weekend in East Lansing, but that was in Seattle. Bruno Mars and the Red Hot Chili Peppers' performance on Sunday night attracted the largest audience in the history of the Super Bowl, attracting 115.3 million viewers, Fox announced Monday, citing Nielsen data. That figure surpasses the prior period of 114 million set by Madonna 2 years ago and the 110.8 million who tuned in to see Beyoncé last year. The game had an average viewing audience of 111.5 million viewers, the largest in history, and the 4th time in 5 years the Super Bowl has surpassed its own record. And today's trivia tidbit. Today marks the 10th anniversary of Facebook. What was started out as a small idea in the Harvard dorms has grown to a $135 billion company, which by the end of 2013 was being used by 1.23 billion users worldwide, adding another 170 million over the course of the year. Despite its fabrications, the Aaron Sorkin-David Fincher film The Social Network has also become a new classic for many. Today's trivia question. During one of the deposition scenes, it is mentioned that the invention of Facebook made Mark Zuckerberg the biggest thing on campus that included 19 Nobel laureates, 15 Pulitzer Prize winners, 2 future Olympians, and a movie star. One of the lawyers then asks, who is the movie star? And the response is, does it matter? Today's trivia question. Who was the movie star turned student in question from the deposition in The Social Network? Did anyone see that movie, The Social Network?
I have not seen it yet.
You know what? I haven't seen it either. Joel, did you see it?
I did not.
Shubs, did you see it? Shubs saw it. So, did you put the question in the chat? Okay, so the question's in the chat. Who was the movie star in The Social Network in question that attended Harvard? We'll just hold on for a second. Do you want to even take a guess, Joel?
I have no idea.
I'll even answer some yes or no questions if you want.
A movie star.
It's actually someone who's been mentioned in this office before. No? Nothing? Yep. Oscar winner. Yeah, very good. Brent, any guesses? You want to just throw one into the dark there?
Yeah, I'm gonna guess. Oh, what's his name? Donnie. I'm gonna guess Donnie.
Donnie.
Yep, Donnie from The Wolf.
Oh, Jonah Hill?
Jonah Hill is my
Gotcha.
guess.
The correct answer is Natalie Portman, who was enrolled at Harvard from 1999 to 2003 and helped screenwriter Aaron Sorkin by providing him insider information about goings-on at Harvard at the time Facebook first appeared there.
Dang, that was a good one.
That wraps it up for today's editorial headlines and trivia tidbit. Just a reminder, ladies and gentlemen, the show would not be possible without our dear friends at OptionsHouse, who will give you 150 commission-free trades if you sign up for an account through this page. Make Steve Claussen proud. Make a click on one of the buttons at the top, at the bottom right of the page. Go through, open an account through OptionsHouse, get 150 commission-free trades just because you listen to Benzinga's pre-market prep. That wraps it up for me, and now I'm going to start looking for Brent again. Where did he go? He's over there in the corner somewhere. Brent, do you have any rating changes
I'm
for us?
sneaky. Yes, I have a few rating changes for you, but the market is open. Just wanted to highlight that real quick.
Open for biz.
Open for biz. Looking at S&P futures 1744.75. Let's see where cash is at 1749.67. That's up about 0.5%. Got a big bet on the line today, Joel.
I do.
I'm kind of nervous for you, man.
No, I think I'm gonna.
No.
Come on, market. I'm never cheering for the market, but I am today. Just looking at this, just technically here, what I'd really like to see, we had a pre-market high, 1746. We're trading right near that level here, 1745.75. Ticking 46 here. Come on, 46 and a quarter. Make a new high here in the pre-market. But going back up on the dailies here, I don't have my my levels in front of me though. Not a lot of areas of easy resistance to pick out here since you came flushing down to that area. So I'd call a nice round number of 1750, your next minor resistance point. But really like to close this 15-minute bar here over that 1746 level. Did tick 46 and a quarter. So longer the market can hold up here. You have some shorts bumming that they didn't cover yesterday, and you can get some follow through. And how are we doing things on the ratings front?
I am noting, let's see, I got about 7 or 8 notable upgrades this morning, just a few of the notable downgrades. Some of the upgrades, Citigroup upgrading shares of OpenTable this morning from sell to neutral. Also upgrading shares of Allergan, that is Alpha Golf November. They now rate that stock with a buy. Shares of Zynga up almost 7% pre-market. I actually haven't checked it since that opened. Upgraded this morning at UBS. They raised their rating from neutral to buy. Joel, I think we should take a quick gander at this one. Zulu November Golf Alpha, the good old maker of Farming with Friends,
Right?
and other topics.
And word bill or something like that.
And
Word Bill, do they have Candy Crush too, or is that somebody else?
That's an excellent question. Candy Crush is like the rage right now.
Yeah, well, I think someone at Bank America might be cleaning out their desk today, right?
Bank America was yesterday, right?
Yeah.
Okay.
Bank America came out with the downgrade here, and it was kind of interesting action. I was watching this thing, and I really thought, with the downgrade, with the negative market, that we were going to go down and take out that 410 low.
Right.
That was a gap low, but that wasn't the case.
Not the case.
Not the case, and kept on sitting there with a bid there at 411. It didn't get it. 416. Never chased it, and it got back and made a new high for the day. And just when you talk about relative strength in the stock, the Zinger here ended up gaining 9 cents on the day, made a new high from Friday, and so relative strength. And then lo and behold, you get the upgrade today. Now things are getting really very, very interesting here. There's really no resistance in this thing. I think you have to use the $5 level.
Nice round number, I guess.
Nice round number. Some people probably using that in a target. Sitting on a bunch of shares. Now you have to go back a long ways in order to see this thing trading at $5 here. Going to take a look. Let's see on the weeklies here if we can identify it. I guess you got just a nice rounding base there. Last time we traded up in the $5 quadrant was back. We traded $4.95 in July, and then the next week at the end of July we traded $5 and a quarter. So let's keep an eye on that level. I guess you also have to keep an eye on the the average daily range here to so things don't get out of hand. But let's see if the Zinger can make it to 5.
Right, definitely gonna be watching this one, especially with that underperform rating at Bank of America yesterday. Now we get a buy rating from UBS, and as you're highlighting that $5 level, looks like this is gonna be an interesting one here over the next little span that we have. Jumping back into the upgrades, UBS upgrading shares of Gap Golf Papa Sandy from neutral to buy. Credit Suisse upgrading shares of Devon Energy Delta Victor November to outperform. Jeffries upgrading shares of Pfizer this morning. Here we go.
Take a look at the Pfizer monster.
Why not? It's getting a huge pop this morning, actually. 4%. That's about $1.20 we're up right now.
Wow. And, there's another issue that showed some relative strength yesterday, but it had news attributed to that. Some positive trials on advanced breast cancer. So you are getting a nice move in that today. You have followed through, though. I was looking at the resistance at 31.69. Said see ya to that. That's the level we hit yesterday. And now with the positive momentum in the S&Ps, people are back on the Pfizer. Quick pop off the open up to the $32 level. Had a few highs back at 32.02, 32.08 back in late November. Perhaps, how about some size in there at the $32 level? So that good target here. The close from yesterday were way, way above that here. I guess I'd like to see it hold this 31.69, which was the high from yesterday. We got something coming out of the chat room here. And
Yeah.
I honestly say, now come on, Brent, do you know what stock that is?
Oh yeah.
What stock is that?
Techmira Pharma.
Oh, Techmira Pharma.
Let me check this one out.
We're
Looking
talking
for some
pharma.
news.
The pharma.
Yeah.
The pharma monster. Okay. Obviously, got a little bit of good news here. Another stock that held up well over the last few days, but you're bumping your head against the $15 level. I don't have my open book ahead of me here, but you hit 14.96 yesterday. You hit 14.99 in today's session. Boy, what?
That's a 52-week high actually.
That could be. Let me
14.99.
Yeah. Do you know what they do? Do you know what they're farming in?
Let me see what their product is. It looks
Wow,
like
they had just whatever their product is and whatever they're doing, they did it right here in January. I should have picked that as my stock of the year. I didn't see that kind of move. And now you're running into the $15 level here. Check your open book, see if there's some size kicking around there. But really, like it's only the second attempt that it made there, so it might take another day or two to get that. But it backed off that $15 level again here. So this target. You also had a high at 14.85 back on Friday here. So in order for that move to continue here, I'd really like to see it bust through that $15 level.
So it looks like they got a couple of drug candidates right now, but the one that I'm seeing is a lipid nanoparticle delivery technology.
Oh, really?
Yeah. So
I just
now
read
you
it-
know exactly what they do,
Yeah, I just
Joel.
read an article on that.
Yeah, what'd they say? All right, one more upgrade here. We should go over real quick. Baird upgrading shares of Gilead this morning, and let me just check the chart on that
Jeez.
one.
Is that
We
at
should be
100
getting a
yet?
move.
Is that at 100 yet?
It is not. Actually had some downside yesterday. Touched below $79 yesterday. We opened over $80 this morning, and now a bit of a continuation. Looks like 81.16 was a high today, so it doesn't look like it wants to sort of charge through that $81 level.
Dennis always talks about his largest holding. I know this is Joe's largest holding. When that thing hits 100, Joe's going to be out of here. Made a move yesterday. It's finding some resistance on the daily chart here. Had three highs around the $82 level, 81.86, 81.75, 82.20. So someone targeting that whole $82 level as a major resistance level. We'll keep an eye on that. Coming back on the downside here, boom, 79.85. We got to pop off that. So we'll not like to see it go back down to that opening low.
All right, so we got just a couple downgrades that I'm going to hand over to Jake here for a few minutes, go through some of the movers. We have Morgan Stanley downgrading shares of Tesoro, Tango, Sandy, Romeo, Oscar to equal weight. Eurobank, Bankhouse Lamp downgrading shares of Deutsche Bank this morning. And I'm trying to remember who downgraded Deutsche Bank the other day. Looks like we are forming a bit of a trend here. It was Barclays, actually, and that was on the 31st. Barclays downgrading shares of Deutsche Bank. So getting a little bit of follow through today. Shares of Newmont Mining downgraded from overweight to neutral at JP Morgan. And the last downgrade, top downgrade for the morning, I'm going to have you take a look at this chart, Joel. Take two downgraded at both Wedbush and at Benchmark. They had results last night. The stock was halted just ahead of those results, and we have shares down about 10% at last check, over $17, but getting crushed today.
Okay.
That is Tango Whiskey Oscar.
Okay. All right. Let's pull the chart up here for TTWO. Getting downgraded here. Trying to get my data to come in here. A little bit slow with all the prints coming off the open. Just a quick update on the S&Ps. We have backed off. Made that new high. Got me all excited. Went to 1746 and a quarter, or 46 and a half. 2 ticks above the pre-market high. Now we're falling back. Just real quick on that take 2 here. We are all the way back down through the low that we had on the 22nd at 1733. Had another low at 1706 and a few lows under that. So 17 a big level for take 2 to hold. Jake, how you doing this morning?
Morning, Joel. I'm looking at these S&Ps. This has been wild. Earlier this morning I was on another Chicago show that I jump on every now and again, and they were asking, what do you think is the bottom? Because it was, at that time, we were getting a little bit of a rally, but it looked like we were going to continue downwards with the weak Chinese data last night, and we were saying maybe 1700 is where we stop, and now we're getting this strength in the pre-market. I don't know, just really interesting to watch this rally go on. And I mean, Joel, do you think that we can break that 1750 level? Like, 'cause I feel like that's a big psychological level, at least in my eyes.
we went whooshing down through that area, yesterday, and I sure like to see us hold 1740 here. I got that major wager going on with Dennis here. What I'd be looking at, 12-point range. A little over a 12-point range. Half of the day's range is 1740. We did find some intraday support earlier during the pre-market broadcast at 1740. So really like to see that hold and drift back up to the 7. Go back and challenge that high. If in fact that 1740 does not hold, I am going to start to get a little nervous, and I'm going to be. I just might have to buy a Potbelly's restaurant instead of taking Dennis there all those times. But,
Can always buy shares. PB.
Okay, what else we got on the radar?
We had Zynga was really moving. I don't know if Brent went over that upgrade
Yeah,
it caught
he did.
this morning, but it's really been rallying on that. And the reason that's really interesting to me is Bank of America downgraded it yesterday, and then UBS comes out with the upgrade this morning. They basically said that the guidance was it should have been stronger. They said that the acquisition was huge for the company. I mean, when I first looked at this thing, it was up 6%. Now it's up almost 10%. Looks like it may be heading for that $5 level. I'd be really interested to see what happens if it breaks $5. Any thoughts there for Zynga?
I think it's going to have a little bit of a hard time getting through that $5 today. Maybe not. I mean, it's been quite a while since it's traded up there. A lot of people with big positions here. I did notice that if it does get to 5, there was a high. Oh, man, you're going way back on this thing. It hasn't been traded at $5. The Zinger has not traded at $5. You need to go back to all the way to 2012, I believe, in order to find that high. Let me pull it up. Yeah, 5.25 back in July of 2012. So if in fact it can clear that $5 target, 5.25 would be another objective. I mean, you probably got a lot of people shorting that stock yesterday. It had the big run up and the big gap and then the downgrade. So people like, okay, this little run is over. And then UBS, who's obviously much more influential on the street, comes up with the upgrade, and people are scrambling.
Well, Joe, we've got gold above or below 1250. You've got crude oil above $97. S&Ps are on the rise. Dow looks like it's in the red, and the Nasdaq's on the rise. Once again, it's above 4,000. So, kind of a mixed market right now. Things looking kind of interesting right now. Maybe the traders just haven't decided where they want to put things. What are your final thoughts on the market for today?
Mid-range here, 1740. I'd really like to see it hold that level. I mean, a lot of times when you get a big cascade down like you did yesterday, a lot of people are buying along the way, on a short term. They're so used to buying the dip. You're getting the dip. You got the rip here up north. So I'd like to really see us, climb above that 1740 level, go back, challenge that pre-market high of 1746.50. Well, thanks for joining the broadcast today. I hope you got some good tips from Steve Claussen, and we'll be back with you tomorrow.